everyone, and welcome back to the channel. Today, we're talking about a company that touches almost every part of our lives, Amazon. They just dropped their latest earnings report, and while the numbers look strong on the surface, there's a fascinating story unfolding behind the scenes, especially with their cloud business and the intense race for AI dominance. I'm going to break down exactly what happened, what it means for Amazon's future, and why investors reacted the way they did. Stick around, because I'll share the biggest takeaway about Amazon's long-term strategy and what it means for you at the very end of this video. You won't want to miss it. Let's jump right into the big picture. Amazon's second quarter results were impressive, at least on the surface. The company reported total sales of about $168 billion, which is a healthy 13% increase compared to last year. This easily beat what financial analysts were expecting, which was closer to $162 billion. When it comes to earnings, Amazon really delivered. They posted earnings per share of $1.68, significantly outperforming the $1.30 per share that Wall Street analysts had forecast. This kind of beat usually sends a stock soaring. But here's the twist. Despite these fantastic top-line numbers, Amazon stock actually slid more than 3% in after-hours trading right after the announcement. Why the dip? It came down to their outlook for the current quarter. Amazon said they expect operating profit to land between $15.5 billion and $20.5 billion. While that's a wide range, the midpoint of that forecast was slightly below the approximately $19.5 billion that analysts were hoping for. This slightly lighter profit outlook spooked some investors. They're really eager to see Amazon's huge investments in artificial intelligence, or AI, start paying off in a big way right now. President Trump's trade policies and tariffs were also a topic of discussion. Amazon CEO Andy Jassy said that while there's a lot of talk about how tariffs might affect retail prices and how much people spend, it's tough to know the full impact. He noted that so far this year, they haven't seen demand go down or prices go up in a major way because of tariffs. He added that if costs do end up higher, Amazon plans to absorb them. Now let's talk about the real heart of Amazon's profits, Amazon Web Services, or AWS, their cloud computing division. This is where a lot of the excitement and some of the concern is centered. AWS had a strong quarter, with sales climbing 18% to about $31 billion. This was right in line with expectations. AWS continues to be the undisputed leader in the cloud infrastructure market. In fact, Amazon CEO pointed out that the second largest player is only about 65% the size of AWS. However, the competition is getting fierce. Both Microsoft and Google reported their cloud results recently, and their growth rates were much higher. Microsoft's Azure cloud services saw a massive 39% growth, and Google Cloud grew 32%. While AWS is a significantly larger business, making it harder to post those eye-popping growth numbers, some analysts found AWS's 18% growth very disappointing by comparison. Some are even starting to suggest that if Microsoft's Azure keeps growing this fast, it could potentially overtake AWS as the largest cloud provider by the end of next year. The cloud division's operating profit, which is essentially its profit margin, also saw a squeeze. AWS generated about $10 billion in operating profit, which was slightly below analyst estimates. Its profit margin for the quarter dropped to about 33%, down from nearly 40% just last quarter and 35% a year ago. This is its lowest profit margin since late last year. So why the squeeze? It's largely due to their massive spending on AI infrastructure and new data centers. Amazon's chief financial officer explained that factors like a seasonal increase in employee stock-based compensation, unfavorable foreign exchange rates, and higher depreciation costs from these ongoing AI investments are putting pressure on those margins. But Amazon CEO Andy Jassy remains very optimistic. He sees cloud growth accelerating as more businesses resume their move from their own private computer rooms to the cloud. He also expects a big increase in companies using AI applications, and Amazon is bringing more cloud capacity online to meet that demand. Jassy emphasized that Amazon has key advantages, including custom-built chips that offer much better performance for AI tasks, He also highlighted Amazon's strong focus on security and the fact that so many businesses already run their applications and data on AWS. This makes it natural for them to add AI workloads there too. But what exactly are they building with all this AI investment? Let me give you some exciting examples right now. Amazon is making an incredibly bold bet on AI. The company is committed to spending up to $100 billion this year, with the majority of that going towards enhancing its cloud capabilities. Their overall spending, things like data centers and other infrastructure, nearly doubled this quarter, totaling over $32 billion. This isn't just a small investment, it's a monumental gamble on the future. Amazon is actively integrating AI across their entire business. For example, their AI-powered Alexa Plus program has been expanded to millions of customers. They've launched new AI shopping agents designed to help customers find what they need more easily. They're using AI models like Deep Fleet to optimize the productivity paths for their over 1 million robots in warehouses. And they introduced Kiro, which is a new software development tool that allows developers to write code using natural language, making coding much easier. They also launched Strands to build AI agents and Bedrock Agent Core to operate those agents securely. Beyond their internal development, Amazon is forging key partnerships. They made an $8 billion investment in Anthropic, one of the biggest artificial intelligence startups. They also struck a deal with the New York Times to use some of their content for AI training purposes or for generating summaries for Amazon products, reportedly paying between $20 million and $25 million a year for the licensing rights. This massive AI push isn't just about new products, it's even changing Amazon's own workforce. CEO Jandy Jassy told staff that productivity boosts from AI will reduce our total corporate workforce as they gain efficiency. In fact, their headcount fell by 14,000 workers from the previous quarter. While cloud and AI are central, other parts of Amazon's business are also thriving. Their advertising business was a particularly bright spot, with sales jumping 23% year over year to nearly $16 billion. It's now the third biggest digital ad platform, and Amazon is even offering generative AI tools for advertisers to easily create ads from text prompts. Online store sales grew 11% to over $61 billion for the quarter, and subscription revenue, which includes Amazon Prime and audiobooks, was up 12% to over $12 billion for the quarter. Amazon is also making big investments in expanding their delivery network to bring faster service to customers in more rural parts of the US. So, what's the biggest takeaway from Amazon's latest earnings report? It's clear that Amazon is playing the long game. They are making incredibly bold, calculated bets on artificial intelligence, pouring tens of billions into infrastructure and innovation. This massive spending is squeezing their short-term profits and operating margins, especially in their highly profitable cloud division. But, according to CEO Andy Jassy, this is a necessary step to secure their dominance in the future AI landscape. They believe that by investing heavily now and building out superior AI capabilities and infrastructure, they will be the go-to platform for companies looking to integrate AI, especially since so many already rely on AWS. This aggressive strategy is a clear signal that they are ready to compete fiercely in the AI era, even if it means a temporary hit to their bottom line. And that's the full scoop on Amazon's latest earnings report. It's a fascinating look at how even the biggest companies are navigating the incredibly competitive AI race. What do you think about Amazon's big AI gamble? Let me know in the comments below. If you found this video helpful, please give it a big thumbs up. Don't forget to subscribe and hit that notification bell so you don't miss a single video. Thanks for watching, and I'll see you in the next one.